Hello, good evening, everyone. I am Ankit Sarma. I am a qualified chartered accountant. I will be taking your classes for management accounting. So, management accounting is a very vast page. It's a very vast chapter. Management accounting. लिखा हुआ है इसे देखो. So, when we say management accounting, how vast it is. When you want to know how vast it is, you can say that cost accounting is just a branch of management accounting. Management accounting covers many other things, and cost accounting is just a branch of management accounting. So, how we use management accounting and how do we do management accounting? First, we want to know financial accounting everyone knows. Financial accounting everyone knows. So, who are the users of financial accounting? We will go slowly. Today we will cover only the concepts and introduction part of management accounting. What is management accounting? Who are its users? And how management accounting is different from cost accounting, how it is different from financial accounting. We will just try to brush up the concepts. From tomorrow we will start the practicals and the chapters. So first, what do we see? We see that who are the users of financial information. Users of financial information. Financial information. Financial information. Who are the users of financial information? Can anyone say? Users financial information कौन use करेगा कोने use करिबो financial informations बिला financial statements जेने क्या तुम्ही balance sheet बनाबा PL बनाबा cash flow बनाबा who are going to use these informations? Management, creditors, investors, right? Management, creditors, investors, then then regulatory authorities, financial institutions, then the taxation, for taxation and other purpose the government will use it. So these are the users of financial statements, the profit and loss account, balance sheet and the cash flow. So this comes under financial accounting. The records that we keep comes under financial accounting. So then there will be cost accounting. Cost accounting is for some industries and companies, cost accounting is mandatory. Cost accounting and then cost audit is mandatory. So there will be users of cost audit. Then there comes management accounting. Management accounting, the users will be only management. The only users of management accounting is the management. And they will use it for decision making purposes. Management accounting is only used for decision making purposes. It is not used for reporting. We do not share management accounting informations for any reporting purposes. We do not share management accounting reports and the data to external users. Say, I am an outsider, I have invested some shares in some company, say Hindustan Unilever, but Hindustan Unilever will not give me the management accounting informations. They will give me the profit and loss account, balance sheet, and cash flow. That are financial information that are meant for me or any other persons. So this covers the first topic. So the branches in the next pages they have mentioned the branches: financial accounting, cost accounting and management accounting. Management accounting is concerned with the provision of accounting information with people, internal users. It is also management. Management means the internal users. Internal users. It might take some time for me to write here. I have just the first class for me. So it helps in better decision making. Management accounting helps in better decision making. you may jot down these some points. The term management accounting comprises of two words, management and accounting. While management is all about running an organization in consonance, management means to run the organization. Management are the top level persons who decides how the work is to be undertaken by a company. And the accounting is to keep the records so that they can take an informed decision to run the organization. So the management may require the details such as financials, non-financials. Financials is all that is the numbers and other things. Non-financials may be how the employees are performing, are they happy, how our product is performing, are our customers happy with our products. Then they need not be 100% accurate. The financial accounting information needs to be accurate. There should not be any variations in the financial accounting. There should not be any mistake in the financial accounting information or cost accounting informations that may lead to adverse audit reports. So, but the management accounting information may not be 100% accurate. It may be to some extent accurate, and it also includes forecast. We also include forecast based on past data. Based on past data, we forecast how the future will be. Management accounting involves to analyze how the future will be. So it is generally very vast reports, and it helps in decision making. And there are the management hierarchy. Top level will be there, directors will be there, then there will be senior management will be there, then mid-level management, then there will be lower level management. Generally the users of financial, they are generally the preparers of financial info. They are generally the person who prepare the management accounting informations. They generally prepare the management accounting informations, and the senior management and the directors, they use this information for decision making, whether a product should be continued. Say Hindustan Unilever is making many products. They are making Lux, say for example soaps. They are making different types of soaps, 4 or 5 types of soaps you will find that Hindustan Unilever is making. And Hindustan Unilever is making say 5 types of soaps. Say a company, 5 types of soap. Soap 1, 2, 3, 4, 5. Now they will analyze the profitability of all these 5 types of products, and they will see which products to continue and whether they should stop manufacturing a product or they should increase the production of a product where the demand is very high. So they will take this kind of decisions. And who will prepare? The mid-level management along with the lower level management. They will prepare these informations. And who will use it? The top level management and the directors. They will use it to take the decisions. Generally decisions are taken by the top level management. So there is Chartered Institute of Management Accounting who has tried to define the word management accounting. Generally there is no specific definition of management accounting, but CIMA official terminology states that management accounting is the application of the principles of accounting and financial management. What is management accounting? It is the application of financial and accounting principles Principles. Why? To application of financial and accounting principles. What do they do by applying these principles? They will create, protect, preserve, and increase. What do they? For increase value. For shareholders. So what do you understand by management accounting? Management accounting is the application of financial and accounting principles. What do they do by applying it? They create, they protect. First they will create, and then they will protect. Whatever is created, say the value of the company they have made is 100 rupees. Now they will try to protect it, then they will preserve it, then they will try to increase it. The value. What? The value for the shareholders. Of course, whenever a company's value is increased, who are the beneficiaries? The shareholders. So this is one, whenever asked for, we can write this definition. What do you mean by management accounting? Then we can go to the next topic, the scope of management accounting. Scope of management accounting. When I started the class, I told that the scope of management accounting is very vast, and cost accounting is only a part of management accounting. Scope of management accounting. Scope of management accounting. So management accounting, see, the book starts with, there is no single definition of management accounting. It is in page number 9. In the previous section, it is reiterated that there is no specific no single definition of management accounting. Management accounting is very vast to be defined. The work of management accounting cannot be listed exhaustively. It is evolving. The work of management accounting is evolving. The work of management accounting is evolving. It has started with very basic concepts, and now they are using very high technologies for management accounting and for decision making. So it is ever evolving. Some of the broad scope of management accounting we can enlist is budgeting, planning and forecasting. Measuring, budgeting, planning and forecasting. First we prepare a budget. Have you got a basic idea of budget? Budget means how much expenditure we will incur in this year, and then we plan that what will be our profit this year. So this is budgeting, and the planning for the future. Planning, budgeting, planning and forecasting. These things are correlated, and we will do all these things together. That we will plan that this year we will do these things, and for these things we will incur this much expenditure, and in turn we will get a return. So our profit, we will estimate a profit that we will earn a profit of this much this year, and then we will check then we will do standard costing. We will do the variance analysis at the end of the year, that we budgeted this much, but our actual expenditure was, say we budgeted 100 rupees, our actual expenditure was 110. We budgeted or forecasted our sales as 180, and it was 170. So we will do the variance analysis. and we will try to find out the reasons why there is increase in cost, or why there is depletion of sales or revenue. So we will try to analyze the reasons, so that next year we can improve our production or profit. So that is budgeting, measuring organizational and divisional departmental performance. So we will measure each product, each organization, each department's performance, comprising comparing results and performance and within and between organizations. Say a company in the same industry, I gave an example of HUL, so it will try to analyze with the products. Say it makes 5 type of soaps, so it will try to analyze the result of these 5 types of soaps, and then also it will also try to see some other company. Say ITC is also manufacturing soaps, so it will also compare its product with the products of ITC, so that they can get it is industry comparison, comparing within itself and comparing with the industry, to get a look at how we are performing in the industry. So assisting in the process of increasing efficiency and effectiveness, the performance of past and future capital investment, advising on decision about product mix, markets to be served and selling prices, advising on decisions on whether to outsource products, components, activities and services, advising on decisions involving the investment of scarce fund between a range of possible alternatives, assisting in the making of a wide range of strategic decisions. So they have enlisted some of the scope of management accounting. Management accounting scope is much vast, so we cannot enlist all the scopes, but when asked for, you can write a few of the points from this. So while fundamental activities of management accounting would include calculating the profitability of product, service and operation, allocating cost to products. Say here only we said, no, allocate the cost to the products, analyze the profit of each product, each service. The whole profitability is prepared by the financial accounting, so you get the whole profitability there. But to analyze each part, each division, analyze minutely the details. So this is the work of management accounting, so that they can improve for the future. And setting interdivisional transfer prices. This is also a part. Say there are 3 divisions in a product, in a company. One division prepares a product, its final product becomes the raw material for the next division, the division 1, 2, 3. So it has a cost of 100 rupees. Now at what price it will transfer it to the next department? So there is a mechanism to calculate it, and it is called transfer pricing. It is in our syllabus, we will go through it. So this is also a part of management accounting. Then we will go through 1.14. It is evolution of management accounting, how management accounting have evolved. Management accounting evolved during the Industrial Revolution. So when there are industries, only then you require management accounting, right? If there is no industry, you don't require management accounting. So management accounting evolved in the United Kingdom during the Industrial Revolution. The International Accounting Federation, IFAC, has described 4 stages. It has described four stages of management accounting. Stage 1, first stage, stage 1, stage 2, stage 3 and stage 4. The first stage they have called the classic era, the classical era, where they have mainly focused on cost determination and financial control. Here what did they do? Cost, they determined the cost. and they did financial control. Cost determination. First they try to, in financial accounting you cannot determine the cost of each product, right? You will just prepare a balance sheet, all the cost of sales and all the sales, and then you will write all the indirect expenses and you get a net profit. Here you will get an operating profit, below you will get a net profit. The cash flow also, cash flow from operating activities, financing and investing activities. You do not prepare it product wise or service wise. So in the first stage they tried, it is prior to 1950, they tried to prepare the cost product wise, and then they implemented financial control. Financial control say they try to reduce the cost or they try to increase the efficiency. Then the second stage came, age of information for management and control. During this period, the main focus of management accounting was to provide information on planning and control issues. Here came the second stage, it advanced. Here they started to planning and control started here. So here they started planning and control, means now they know the cost. So they tried to use standard costing. Standard costing and profitability analysis were introduced in this step, in this period. Management activities, but not the role of staff. During this period, management was focused on the company's production process and internal analysis and paid less attention on the external business environment. So here they didn't pay to the external, what the government regulations would impact the business. They tried, they know the cost of the product, they know the financial controllings. Now they tried to implement it. They introduced standard costing, say BEP, they tried to analyze marginal costing, the BEP and all. They tried to introduce here. In the third stage, management accounting focused on reduction of waste of resources in the production process by eliminating no value activities. So here no value activities were eliminated. No value activities were eliminated. The Japan economy, there was a boom in the Japan's economy, and rapid technological development contributed to the growth of global competition. Here, at this stage, the computers and robots were used. So this is the period 1965 to 1985. 1965 to 1985. So at this stage the computers were on, there were robots were there, so they started to analyze the efficiencies. They started to reduce the no value activities, the activities that do not contribute any value. So they started to reduce them, and they tried to increase the efficiency of people. Computers were introduced, robots were introduced to help them. So this increased the efficiency of the people. Then after 1985, what has happened? New technologies are introduced. So at this stage, new technologies, target costing is used. Target costing, just in time. So these are the new concepts that have been introduced. Just in time, ABC costing, our next chapter is there. ABC costing. So these are introduce balance scorecard, valuation analysis, strategic management accounting. So basically we will study this part and some of these parts. This is a very important part. Target costing, just in time, ABC. So these are the 4 stages how management accounting has evolved. So I already told that management accounting is an evolving concept. Even now, as we are continuing this class, some concept of management accounting might be evolving at some part of the world. So it's an evolving concept. Like the humans have evolved, the technology has evolved, so as management accounting, because competition is there. Every business wants to survive. If you do not survive, if you do not improve yourself, your technology will become old and your business will perish. So at page 12 they have given the stages. We can see at the first stage, before 1950, what were the activities were there? They were cost determination, standard costing, direct costing, record of cost accounting, allocation of indirect cost, uniform costing, absorption costing, budgeting, return on investment. So these are the things, basically recording. They try to record all types of cost. Then at the next stage, 1950 to 65, they started to use this information to take decisions. They standard cost accounting developments was there, marginal costing came into, target costing came here, application of discounted cash flow. First, before 1950, they were not discounting it. The time value of money was not applied. So after 1965, after 1950, they discounted it. They introduced the time value of money. So with time, the value of money decreases. The value of 1 rupees in 1950 is not the same as today. The purchasing power was more in 1950, or say even 2000. In 2000 you could get say something in rupees 100. Today you will not get it at rupees 100. It might cost you 150 or say 200. So that is the the value of money reduces with time. So they have introduced discounting, then Kaizen costing. So these are the things they introduced till 1965, and then after post 1965 they tried to again use it. Activity based costing started, activity based management. Then 1950 to 65 they introduced Kaizen costing. Now they have tried to apply this Kaizen costing. Just in time was introduced, life cycle costing are introduced. Now they have become more advanced. They are using the value chain analysis, they are using SWOT analysis. SWOT is strength, weakness, opportunities and threats. So customer profitability analysis, competitor analysis. I gave an example of ITC and HUL. HUL not only compares its product within itself, but also compares it with ITC or say some other manufacturers in India or abroad. So this is the competitor analysis. Then we will go to management accountant and strategic decisions. Strategies are long-term plans which help organization to realize its goals. Strategy. Now strategy what? Strategy, what do we understand by the word strategy? What do you understand by the word strategy? Your plan, your strategy to be successful in your next exams. You plan how we will become successful in our next exam. So this is our strategy. We will study from this to this. We will go for coachings, and then again we will study. We will do 3 times revisions or 4 times revisions. We will try to solve past question papers. So this is our strategy to become successful in exams. So the management also makes success, the company also makes strategies how to survive in the market, how to beat its competitors. So strategies are long-term plans. They are long-term plans. Strategies are long-term plans which help organization to realize its goals. They are not short-term, not the next 1 month or next 5 months. They plan where we will be in the next 5 years, what products we will launch in the next 5 years to survive in the market. So these are strategies. Strategy is defined as a general direction set for the company and its various components to achieve a desired state in the future. Basically, businesses follow one of two broad strategies. Some companies follow a cost leadership strategy. These companies for long-term sustenance choose to provide quality products or services at low prices. Other companies follow a product differentiation strategy. These companies offer differentiated or unique products or services that appeal to the customer. The products are often high priced than the products or services of their competitors. So there are two types. One is cost. And the other is uniqueness. So where cost comes into play, cost generally comes into play when your product is generalized. Say a soap. So you will generally try to buy a good quality soap and which is also reasonably priced. You will not go for a soap which is costing you 1 lakh rupees when all other soaps are costing you say 30 rupees. You will not purchase a soap which is costing you 1 lakh rupees, right? You will generally go for compare all the soaps that are around 30 to 50 rupees and you will buy the best that suits your skin. But uniqueness, where does uniqueness comes to play? Uniqueness generally comes when the product is of luxury in nature. Luxury in nature. Product is of luxury in nature, then you go for uniqueness. Generally ladies buy a handbag of an average range, but the rich they buy a bag which might be of around $2,000 to $3,000, Louis Vuitton or such other brands. So for its uniqueness, so they will not sell it at a reduced cost. Here there is competition. Everyone will try to sell good quality products at a very reasonable rate. But here, when the uniqueness, the luxury is the nature, they will not try to reduce the price. They will sell it at a very high price, but the thing will be unique in nature. So now it is the management to decide, the management accountant to decide what strategy they will apply. Whether they will apply a good quality product at a reasonable cost, or they will apply the uniqueness strategy. They will price their product high, and whether it depends on whether they would be able to sustain, on which strategy they will be able to sustain in the market. So these are the strategies, the two strategies. Management accountants work closely with managers in various departments to formulate strategies by providing information about sources of competitive advantages, such as the company's cost, productivity, and or efficiency advantages relative to competitors, or the superior price the company can charge relative to the cost of adding features that makes its product services distinct. So uniqueness. So if your product is unique or distinctive, then you can charge a superior price. Management accounting information helps managers to formulate strategies by answering the following questions. Who are the most important customers and how? There are certain questions whose answers are required so that the management can take the decision. And who will provide these answers? The management accounting. Who are the most important customers and how can the company deliver value to those customers? What substitute products exist in the marketplace and how do they differ from products of the company in terms of features, price, cost, and quality? What is the most critical capability of the company, which may be technology, production, or marketing? How can we leverage it for new strategic initiatives? Will adequate cash be available to fund the strategy, or will additional funds need to be raised? So all these questions are very important. Who are the most important customers? If there are no customers, there is no use. So you have to design your product according to your customers' needs and as per their budget. You have to check who are your customers, whether they are ready to pay a high price, whether they will buy your product at a high price, or you have to make the cost, you have to lower the cost so to survive in the market. Then what substitute product exists? This is very important. Now in case of soap, there are very lot of companies, but when you go for a branded products, the luxury products, then there are companies, but you will try to bring the distinctive nature of your product. Then you will try to compare it with the products that are available in the market, their features, their price, their cost and quality. Most critical capability of the company, which may be technology, production or marketing. Then the capabilities that I have as a company. What are the, whether I can learn first, whether I can memorize, or I can understand the concept as a student. So what capabilities do I have? How can we leverage it for, how can I leverage my capabilities for the new strategic initiative? And then will there be adequate cash? If there is no cash, whether we can borrow it from the market, or we have to reduce our capital budgeting. So we'll go to the next chapter, the distinction between financial accounting and management accounting. So the distinctions or the comparisons between financial accounting and management accounting. Financial accounting, what is the purpose? First we will go to the purpose. The financial accounting classifies, analyzes, records and summarizes the financial transaction of a particular period. Financial accounting gives you, what is the purpose? The purpose is that it will provide a summary of the results that has happened during the year. And management accounting helps management to take decisions. It doesn't summarize the results, it helps to take decisions. Application. Financial accounting is prepared to reflect true and fair picture of financial statements. Financial accounting's application is true and fair picture of the financial affairs. You can see an audit report. In audit report, the chartered accountant certifies that the financial statements are true, gives a true and fair view of the financial statements. It is certified by a chartered accountant in case of audit. But management accounting does not require any such certification. Management accounting is prepared to take the is prepared to help the management take the decisions. It product solabo lage ne na lage. So it will help the management to take the decision. What is the scope? Scope is pervasive but not as much as that of management accounting. Management accounting's scope is very broad, much broader. Information type, financial accounting only have quantitative informations. Management accounting will have quantitative as well as qualitative information. Qualitative, the product's quality, whether it is being liked by the customers, the efficiency of our employees, the packaging of the product, everything will come under management accounting. So interdependence, financial accounting is not dependent because on management accounting. Why? It is not even dependent on cost accounting, because financial results you can prepare based on the transactions that have happened during the year. So you have spent so much money, so they are accounted in expenses. You have sold some products, they are recorded in sales. When you buy an asset, it is recorded in the balance sheet. The capital that you invested, it is recorded in the balance sheet. So financial accounting is not dependent on management accounting, but management accounting is dependent on financial accounting. You will use the informations, the historical informations, and then you will analyze them, deep dive into them to take your financial decisions. So management accounting is always dependent on financial accounting as well as cost accounting. Both cost accounting information and financial accounting information are used by the management, and they prepare the forecast to take the decisions for the future. Statutory requirement. Management accounting, there is no statutory requirement for a company or for any organization to prepare management accounting informations. It is only for internal use, strictly for internal use. But financial accounting information are required to be prepared for all external agencies, for the stakeholders, the investors, the government, for payment of taxes, and for all regulatory compliances. The financial accounting informations are required to be prepared and to be submitted. Then formats. Specific formats are prescribed for preparation of financial accounting information. But for management accounting information, there is no specific format. Every lower level management can prepare the financial accounting management accounting information as per his requirement and as per the requirement of the top management. So there is no prescribed format. Users, say we already know that the users of financial accounting information are mainly the external parties, the investors, the creditors, the bankers, the regulatory agencies. They use this information, but management accounting information is only for internal use by the management. Then verifiable. The information presented in the financial accounting, the balance sheet carries all the information in the balance sheet are verifiable. They all have supporting documents, but the information is predictive. You are predicting the future, how we should take action in the future. So management accounting information is not, you cannot vouch those informations. You do not have supporting documents for management accounting information. So next we can start with the difference between cost accounting and management accounting. Till here everything is ठीक, slow, fast, ठीक है. So we will cost accounting. Cost accounting and management accounting. Cost accounting revolves around cost computation, cost control, and cost reduction. Cost accounting includes, first we will compute the cost. Compute the cost. compute the cost control, compute, then we will control, then we will reduce. So this is the main strategy of cost accounting is this. We will first calculate what cost we are incurring, then we will try to control it, and then we will try to reduce it. But management accounting helps in decision making. Application cost accounting prevents a business from incurring cost beyond budget. So we have prepared a budget of 100 rupees. So why the expenditure is exceeding the budget? So this is the purpose of cost accounting. Management accounting offers a bigger picture how management should strategize. As we already know, scope, cost accounting, the scope of is very narrow. It is only this. But management accounting, the scope is very vast. It uses both financial and cost accounting information to take decision making. So it is a very vast concept, so the scope is also vast. Then scope, then measuring grid, it is quantitative. Only these things. Computing the cost. So it is quantitative. There is no qualitative. Cost, you are recording the cost and you are analyzing it. So it is quantitative. It is both quantitative and qualitative, as we just learned in financial accounting. Then subsets. Cost accounting is one of the many subsets of management accounting. Management accounting is the universal set. Management accounting, there are many branches of management accounting, and one such branch is cost accounting. One such branch. It is only one of the branches of management accounting is cost accounting. So basis of decision making, the task of decision making is very less. Even if there is some, it is based on historical information. There is no forecasting the future in management in cost accounting, but we use both historical and future information for decision making in management accounting. Statutory requirement. In some companies, statutory or cost audit is compulsory, but management accounting, the data prepared for management accounting, there is no statutory requirement, so there is no requirement of audit and such other statutory presentation is not required. Cost accounting isn't dependent on management accounting. Cost accounting is a statutory requirement. You will prepare the cost. So it is not dependent on management accounting, but management accounting is dependent on both cost and financial. You will use both the cost accounting data and the financial accounting data, and then you will forecast the future, and you will take the decisions accordingly. And you will take the decisions accordingly. So who uses the cost accounting information? It is used by management, shareholders and vendors. Both external and internal users are there for cost accounting information, but for management accounting there is only management. Correct, no? So we can now analyze the difference between cost accounting and management accounting and financial accounting. We know the differences. It is easy. So now we will go through the functions of a management accountant. What does a management accountant do? By now we have understood what a management accountant do. We can write some points, of course. So these are just listed here. Whatever we have studied till now, they are just listed here. What a management accountant does: he plans and accounts, prepares an accounting system covering cost, sales forecast, profit planning, production planning, and allocation of resources. Planning and accounting. Then controlling. Management accountant assists in the control of an organization's performance through the use of standard costing, budget controls, accounting ratios, fund flow statements, cost cutting initiatives. So he will try to control planning, accounting, then control. Then he will report. Management accountant reports to the top management and assists them to understand the root cause of any deviations or how they can improve in future. Then coordination. Management accountant improves an organization's efficiencies and profit by providing various coordination tools such as budgeting, financial reporting, financial analysis and interpretation, and so on. Communication. Wide range of reports are prepared for the top management. So the top management cannot go through a report of this size. They will require everything in a summary, say in a table, in tabular forms, in graphs, in charts, in bar diagrams. So summaries are prepared. The management accountant generally summarizes the informations with the help of tables, graphs, bar diagrams, and short notes. This is what the management accountant prepares. So he concise the information and then present to the management. Financial evaluation and interpretation. He analyzes and interprets the data presented by the financial accountant and the cost accountant. The financial accountant and the cost accountant prepares financial accounting information and the cost accounting information. He concises them, he analyzes them, and he prepares the diagram and the reports for the management. So he interprets them and he evaluates them. Then evaluation of external effects. Say there is a change in government, and the change in government, with the change in government, we all know that there are change in policies. So how these policies, how these government policies will affect the business. So they will try to analyze this and will try to report to the management so that the management can take the decisions accordingly. Then there is a change in the taste of the customers. They will try to analyze the change in customers' taste and will try to report so that the management can take a decision to improvise the product and to improve it. Then there is a technological advancement. Say now robots have come. So with the advancement of technology, how it will impact their product. So they will try to analyze this and will try to take corrective actions or will try to improve their products. So they will evaluate the external factors. Then economic appraisal. When the government makes a regular announcement about the country's economic situation, management accountant is entrusted with making the economic study and determining the influence of current economic condition on the company's operation. They compile a report containing their observations and present it to the higher management. Then asset protection. Management accountants separate fixed asset register for each type and provide internal checks and control to protect the company's asset. Okay. So now we have broadly known what a management accountant does. In brief, we can say he analyzes everything: the financial accounting information, the cost accounting information, the market environment, the government policies, everything in analyze, and he will concise it in a summary report, and he will present it to the management so that the management can take corrective decisions, or the management can bring in new products so that their company can evolve and make more profit and enhance the CIMA definition. So we can relate this with the definition that we studied earlier. The definition of management accounting: application of accounting and financial management to create, protect, preserve, and increase the value of stakeholders. They will bring in such reports so that they can, first they will protect, they will create, protect, and preserve, and then they will increase the value of the stakeholders. So this is the work of a management accountant. Then we can go through the management accounting and the modern business practices. This is nothing. There is a global competition is there, changing product life cycles. A product earlier, now in case of mobile phones, you can see the life cycle of a mobile phone is very limited. Every year, even Apple launches every year new phones. So they change, the new series is launched every year. So every company is doing that. Even Samsung is doing it. So to be in the market, they improve their product, and the life cycle of the products have become limited. But in case of durable products, say salt, the same Tata salt is running from I don't know how many years. So it depends on the product life cycle. Then advances in manufacturing technology, impact of information technology is there. Now information technology, globalization has become very easy. The world has become very small now. Environment and sustainability. So these are the things. We can go through it. You please do all the exercises behind these chapters. Everyone. Even the online people. Hello?
Yes, sir.
You please do all the exercises. The multiple choice questions are very important nowadays. They are very good scoring. So you please do all the exercises. Tomorrow, Wednesday, Friday, we will start activity based costing. It is a practical chapter and very important chapter. So we will start activity based costing. Today was just an introduction about what is management accounting, what are its scope, and what did we learn. कौन सा important section से that we will see the exam question papers, and we will try to analyze. But everything is important actually. You have to read. Generally, it is a practical subject, so the practical questions will be there. But nowadays the MCQs are also important because it is very much scoring. So you can also that you have already studied in group 1. Okay. So we will try to complete those chapters which are not in group 1. So that you can have more time to practice those chapters. Which are the chapters, you can name them afterwards. So we will do those chapters which are not in group 1 first, and then we will do, if we have time permits, then we will do all those chapters which are in group 1 also. We will try to revise them. Okay. Thank you for the class. So we'll meet on Friday.